The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague. He's rested, he's refreshed, he's bronzed and he's buff. It's Anthony McDonald. How are you, Anthony?
Oh, it's so good to be back, James. We've got plenty to catch up on.
Absolutely. Well, this week we'll try and figure out what Cyclone Trump means for markets, Australia and the Chanticleer team's blood pressure. We'll reveal what top business leaders are talking about ahead of our federal election. And we'll look ahead to the official opening of the ASX's new millionaires factory.
James, like I said, it's great to be back and Happy New Year to all of our listeners. Now, there's been a bit happening in this big wide world in the last few weeks.
Yes.
But some things haven't changed. The old ASX 200 keeps grinding higher, led by, you guessed it, those incredible bank stocks. Is this the latest little market spurt about the interest rate cut coming in a couple of weeks? Because it's not quite we're getting lots and lots of great news out of global markets, James. Like the AI story's been damaged a bit by those concerns about this Chinese ChatGPT rival DeepSeek. There's geopolitical tensions are high. Earnings season is likely to get off to a pretty middling start. So what's going on?
Really good question, Anthony, and I'm not sure. I was hoping you wouldn't ask me what's going on because I think it's getting harder and harder to explain. On Thursday, we saw the bank stocks take off. They were all up more than 2% after incredible runs over the last 12 months. I mean, we're looking at CBA and Westpac are both up 40% in the last 12 months, and yet they can have a day seemingly at random where they add another 2%. These are huge moves. You wrote a bit about this over January. It feels to me this is about flows. So passive money flowing into the market and particularly superannuation money. And those two market forces are just buying the biggest names, the safest names, and they just keep grinding higher. I don't think it's really about fundamentals. In fact, I spoke to a fund manager the other day who's been in markets a long time, and he was sort of throwing his hands up saying, fundamentals don't matter anymore. What's the point? Which is a bit defeatist, but I get where he's coming from. Anthony, have you got a better explanation than me?
James, perhaps it's the anything but China trade.
Okay.
So like you say, it's those two big forces. It's the big industry funds getting money. It's the passive investors. But there's also this anything but China trade. So, the Australian banks, CBA, Westpac, they're sort of immune, as a first order response from China, perhaps unlike the miners. But it's amazing, isn't it? The market's pretty much picked up where it's left off.
Yeah.
Like the ASX was up 4.6% in January. I couldn't believe it when I got back from holidays this week and it was at 85.32 points. Like, wow. I mean, gold stocks have been on fire. Like you say, the banks are running again. Real estate's been running. Discretionary retail ran through January, even though Myer and Premier Investments both said that Christmas trading was tough. Probably because of the interest rate expectations, James, but it's... Yeah. Wow.
And the weird thing is, the higher we get, we're at all-time highs, valuations look stretched. There is still a lot of bad news around. There's a lot of risk in the market. Now, you could say there's always a lot of risk in the market. Markets are always climbing what they call the wall of worry. So, yeah, fair enough. But I guess I would just say there's just not much room for error if you're buying stocks, particularly the bank stocks that are so highly valued. There's not much room for error now. These stocks are very extended. There's every bit of good news that's even remotely possible has been priced into these things. So there is that risk that things can only get worse from here. But look, there's no sign that investors are feeling that at the moment. They're just ploughing on. And I guess all our super returns are going to enjoy the benefits of it for a bit longer.
Let's hope so.
All right, Anthony, I also wanted to check in with you about a good old-fashioned bidding war that's erupted on the ASX over the last month or so, and that's for a company called Insignia Financial, which was previously known to a lot of people as IOOF. Now, there's not one, there's not two, but there's three private equity firms trying to buy this thing for what, to me, at least from the outsides, looked like a bit of a busted-up business in turnaround mode. What makes Insignia such hot property at the moment?
Yeah, James, I agree. I mean, this was probably the corporate surprise packet of the summer for me. I mean, this company, Insignia, it's been unloved for years. It's been stuck in a quagmire of its own creation. I mean, it was always buying businesses. It was buying financial planners, wrap platforms, super, all this sort of stuff, as there was that big turnover in Australian financial services with the banks getting out of sort of wealth management and advice and super. And there weren't many strategic buyers around at the time. IWF, or now Insignia, was one of them.
Yep.
It picked up NAB's MLC. It picked up ANZ's OnePath and ended up with this big collection of businesses and quite a big footprint in the sector. But just no idea basically how to bring it all together and make money for shareholders. So, I mean, we see this all the time, James. These businesses, they buy and buy and buy and buy and buy. Then the new management team gets brought in a few years later to try and work out how to make it work for shareholders.
To fix and fix and fix and fix.
Exactly. Simplify, cut, etc. So that's what's going on now. We've got Insignia, new management team. They've got this turnaround strategy in place. It's a multi-year sort of turnaround, James. And right, a few months in, as a thing looks like it has potential to take off, the private equity guys have turned up. And they're offering to pay Insignia shareholders now for value that's probably going to be created in the next year or two under this turnaround plan. Now, James, like you said, it's not one, it's 3 private equity bidders, 2 household names in Bain Capital and Brookfield, and a third, a bit of a wild card from New York called CC Capital. Now, these firms, they see the complexity, they see the turnaround potential, but, they all want a piece of Insignia and Australia's superannuation system and advice, and can see the sort of natural tailwinds that are there. But I'm still nervous about this one, James.
Yes.
I mean, sometimes you get bidders turn up and they just look like a slam dunk, and you can see it all going through. This is 3 private equity bidders looking at a very complex business with a lot of moving parts.
The big danger is one of them overpays, right?
Oh yeah, but in the meantime, the big danger is that none of them can stand up their bids. At $4.60 a share. The fact that 3 private equity firms have turned up at the same time for the same target, I'm still trying to work out, James, is this the animal spirits alive? Is 2025 going to be the year that private equity really makes a comeback and bids for all these companies on the ASX? Or is this just a bit of a one-off? I don't know. I've been trying to work that out this week.
I guess if you're an Insignia shareholder, though, you're saying, hey, let the bidding wars begin. Let's see if we can get an auction going, and after a few years of pain, get out with a bit of a reward, right?
That's right. And for them, 3 bids is better than none. There was no way the share price was going to $4.60 this quickly any other way. But, I probably took an interest in this turnaround last year and wrote way too many columns on it. But anyway, it came in handy on January 6th when that bid from CC Capital turned up. So
yeah, well, and I think given there's 3 in the room, it's your knowledge will come in handy because there's a long way to go with this deal, right?
Sure is.
Okay, Anthony, let's move to our first topic this week. And could it be anything else? Yes, we have to start with Donald Trump, whose return to the White House has packed more drama into 4 weeks than most US presidents can deliver in 4 years. We've had criminals pardoned, we've had a tariff war started, and this week we even had suggestions the US could take over Canada, Greenland, and Gaza. It's really hard to know where to start, Anthony, but let's try and be a bit methodical and look at the things that could have the biggest impact on Australia. And I think we've got to start with tariffs, right?
Yep, for sure.
Anthony, we saw this week Trump threaten to whack close neighbours Canada and Mexico with tariffs of 25%, and then he almost instantly backed down and delayed those tariffs for a month. But there has been a new 10% tariff levied on China, and of course China's retaliated with its own trade moves. Now, China's Australia's biggest trading partner, Anthony, and a weaker China is just going to naturally buy less Australian goods. This can't be good for us down here, can it?
It certainly disrupts the world order, James, doesn't it? I mean, we are jammed in the middle. Our biggest ally from a security perspective is the United States. Our biggest trading partner is China. Like, China is such a big part of the national budget, James. It accounted for 26% of our two-way trade in 2023. But most worryingly, it accounted for, I think it was 32% of our exports. It is such an important export trading partner of ours, James. All the iron ore in particular that we send over there. It's really, important to the national budget. Now, James, we obviously are the meat in this sandwich. Like you said, Trump's put a new 10% tariff on Chinese goods. China responded by putting the tariff on coal and LNG, crude oil, farm equipment, all that sort of stuff. Now, none of that directly impacts Australia and China, our relationships, or even the Australian-US trade. But, I mean, it's got the potential to rewrite the trade lines and the trade relationships. And that's the issue here, James. Like, we seem to be keeping our head down, like we being Australia, and trying not to take a side. We're trying to run a bit of a dual track here and date both countries, as we have been doing for years, and hope that neither of them notices too much. But, I mean, the thing that causes markets to jump around, James, it's not what happens to Australia, is it? It's what this means for US and Chinese economic growth. And by those two countries, you're talking about global economic growth pretty quickly as well, and inflation and rates. I mean, what happens at that level? It spills down to Australia pretty quickly, right? The global economic growth. I mean, that's commodity prices, it's cost of capital, it's the currency, which is already tanked. And we see every month or every 6 weeks now, the RBA spends a lot of time talking about these global developments at a board meeting, James. So, and it all comes as our economic situation here in Australia is already a bit fragile. Yeah, we're still trying to get on top of inflation and cost of living problems. The rates are still at 13.5-year highs. Economic growth still, well below long-term averages. We don't know where any of that's going. The RBA doesn't know. Investors don't know. And now we've got all this stuff on top.
Yeah.
But James, there's so much theatre, isn't there? It's been quite a dramatic week. And
totally.
The tariffs on, tariffs off. It was nuts at the start of this week. Do you think, James, is this all just the art of the deal? Is it all just bargaining? And if it is, do you think there's a cost to having all this noise in the system?
Yeah, for sure. I mean, it's tempting just to say, put the phone away, and when you wake up, don't look at it for 5 hours, and then you just ignore everything that's happened overnight. I mean, I know a few people in markets who are doing that. Fair enough. I think there's 3 risks that are develop here. One is to markets. We see these gyrations. It's going to be harder to get deals going. It's going to be harder for people to make investment decisions. I think that just the uncertainty weighs on people, and we saw that in markets this week. The Australian market dropped very rapidly, and then it bounced back. That sort of takes its toll, I think. I think the other cost is on where rates are going. The RBA matters, but it doesn't matter anything like what the Federal Reserve in the US does. Yep. Now, if you're the Fed, you think you've sort of got inflation contained, you're not entirely sure, you're sitting on your hands at the moment. What do you think all this tariff talk does? It just makes you go, oh, nah, we'll just sit on our hands for longer. And markets at their current stretched valuations have priced in rate cuts effectively. They might not get those rate cuts, so that is another cost. And the last cost is just geopolitical uncertainty. I mean, straight away, Australia's sending ministers over to try and figure out what's going on in Washington. There's a cost to the sort of distraction about that. I would say there's also potentially a real cost to America. Trump wants to drive through eventually tax cuts. He needs to find a way to pay for those tax cuts. If there's some disruption to global trade and the economy starts to slow, it's just going to get harder. So, Trump likes to create chaos and use it as a sort of negotiating, bargaining tactic. But there is a danger that sort of comes back and bites him.
Yeah, I mean, it can all feel a bit unproductive as well, can't it, James? I mean, like totally. last weekend when the tariffs got announced, everyone's shock horror, and then I think it was Monday night our time, they were all sort of wound back and on hold. Like, it's, yeah. I mean, how's that productive for anyone? But James, Elon Musk's been at the centre stage of all this with the Department of Government Efficiency, or DOGE, apparently ripping massive costs and waste out of the government, such that he's now saying he can pull the US budget deficit down by $2 trillion. Now, that's a staggering number on a number of counts, isn't it, James?
Yeah, this whole thing's staggering. I mean, the reports coming out this week suggest Musk is doing this with the help of 6 college graduates who are sleeping on the floor and drinking Red Bull and just sort of running around the US government saying, nope, don't like that, gone, nope, stop the payments. Yeah. I mean, it feels pretty chaotic, but he does appear to be making progress, and the number he said is, he's got the equivalent of somewhere between $1 to $2 trillion out of the US budget deficit. That's a massive number.
Huge.
I mean, the thing is, put aside all the damage that he might do by, say, killing US foreign aid distributions and stopping all sorts of other federal payments. It's all very messy and could have some serious global ramifications. The thing for markets, though, is if Musk is living up to his promise, that actually takes a bit of pressure off the inflationary impact of tariffs and reduced immigration and that sort of thing. And so the bond market, which was very concerned about Trump's inflationary policies, is looking at Musk's progress on the deficit and thinking, hey, those two things might net each other off a bit. Maybe this isn't as bad as we think. So, yeah, Musk it's crazy. You know, I don't know how the guy has time to do anything with the amount of tweets he seems to send out, X posts.
Yeah.
But, this has actually gone from sort of a crazy project to a serious endeavour now, and serious in lots of different ways. The other thing we've been talking about down in Australia, Anthony, is these big changes to the US government's policy on energy transition and DEI, which we've all suddenly become very familiar with, which stands for diversity, equity and inclusion. Do you think this shift away from sort of the ESG mantra that we've had over the last few years, it's been labelled wokeism by the Trump team, do you think that's going to have an impact down here in Australia?
Oh, no, it's probably the short answer, James. I mean, we're very different to the US. We haven't gone as far down the DEI path as the US. I mean, the culture wars don't burn here like they do in the US. I mean, don't get me wrong, they're there, and you see it when things like Woolworths bans Australia Day and there's a bit of uproar, but it's just not as strong. And we've seen in corporate Australia, James, we talk about this a lot, but these big industry super funds, they've emerged as sort of like corporate Australia's standard setters in the past 5 or 10 years, purely just because of the weight of the money they've got in the share market. They own about a quarter of the ASX. It's heaps. So they're the ones that are peppering the chairs, the directors about ESG matters, including things like diversity, equity and inclusion, along with decarbonisation, executive remuneration, etc. Now, I don't expect the industry funds to back off this crusade, James. I mean, they see it as good long-term business to be trying to promote good ESG. And for all the chairman and directors complaining, mate, I'd say the industry funds are actually pretty subtle about it, and they're patient about it. And, they're not out there trying to blow up the joint. They're just slowly trying to see it go through. So, yes, these industry funds ask a lot of questions. Yes, it takes up a lot of the chair's meetings with them, but they're not really blowing up companies over these matters. So
No.
If you look at super fund Hester, for example, it's probably the loudest one when it comes to these issues. But, I mean, it's got 2 companies on its watch list. It's not really pushing it too hard. So, I mean, as a result, I think corporate Australia will keep going down the decarbonisation path. Maybe it'll be slower, but in reality, a lot of the big targets were likely to be missed anyway. So it was already happening slowly. I don't think that Trump's the one we can necessarily pin that on. I think we'll still see the ASX, encouraging ASX 200 companies to have a third of their directors as female, for example, all that stuff, which is really just sensible. But we've got to remember these industry funds, the BlackRocks of the world who do this stuff globally that try and push through some of these changes or accelerate them, they're all commercial entities, James. I mean, they do what's good for business. They just reflect their members or clients or whatever's already out there. They drop things pretty quickly when it's not working. So I think there will still be the push in Australia to head in that direction.
Yeah, I mean, I think that's the other thing, Anthony. ESG, the energy transition, DEI, they're actually trying to solve real problems.
Yeah.
I mean, yes, we do have a climate that is changing extraordinarily rapidly and that we need to do something about. So you might not like the terminology around it. And yes, the path for the energy transition is going to be lumpy and bumpy and complex and expensive. But we've sort of got to get on with fixing this. And so I think that, and the same with inclusion. I mean, we want more inclusive companies. We want more inclusive society. We want to attack problems like inequality. So it's something that we've got to continue to get on top of.
Yeah, James, I mean, what do you think investors and business leaders do about this? Like about the whole noise of Trump and all the headlines, the drama, all that sort of stuff. Do you think they block it out or try and guess what's next, or how would you approach it?
Oh, I think at the moment it's hard to block it out. It's just so new and chaotic. And
yeah.
I wonder if that'll fade. I don't know, after 4 months, a year. I've got no idea. There'll always be some controversy, but the pace of change this administration's trying to pull off, it's logistically difficult to keep it up. So I reckon we've just got to weather this first period. And look, it's all pretty exciting and interesting and thought-provoking, and there's lots of big issues tied up in it. AI and the way governments work and populism. So, it's good fun to talk about if nothing else.
Yeah. I mean, I agree with you, James. Like the big themes of the next decade, none of them have changed. Climate change, digitization, aging Western populations, shrinking China, generational inequality. It's all still there. No matter what Trump's done or hasn't done, implemented or not, threatens to do, it's all still there. And we get caught up in the day-to-day movements. I mean, us especially, James, that's sort of our job, is to follow this noise. But nothing's changed about the fact we still need cheap energy. We still need more housing. We still need better education and productivity. Like, AI is a work in progress. Like, it's all still there.
Yeah, well said.
All right, James, let's continue along the politics meets business theme and discuss the other big upcoming event, Australia's election. Now, I went to a directors' roundtable with a bunch of ASX-listed company directors this week, and they said it was the Australian election, not Donald Trump and tariffs and DEI, that were creating the most near-term uncertainty inside their boardrooms. James, in a week where the market bounced around on Trump's every turn and U-turn, I found that comment quite telling. I mean, the election, even though when we don't know when exactly it is, it's already weighing over capital investment plans, deals, and other big decisions. And it feels to me like we could be in for a bit of a slow start to the year. No one seems confident about whether we're looking at another Labor government, a Liberal National government, a minority government, or who would lead a minority government. Now, James, I know we started with this show by talking about the ASX near record highs, and I know the bank stocks are flying. I mean, but do you think we'll be muddling along for a while here in Australia while this election plays out, and then wake up in the middle of the year when the election's done and go, 2025 is almost done?
Absolutely. That's a really good summary. I mean, we're about to head into earnings season, which is usually a chance for companies to sort of talk about how well they're going and how big their plans are. No company is going to want to come out and say, have a look at this. We blew away expectations with a monster profit. No one wants to attract any attention. Everyone wants to keep their heads down for the next few months and can make sure their company's nowhere near the front page, nowhere near social media. This is going to be the sort of 6 months of playing dead, if you can, as a corporate. And you're right, that will put the brakes on decision making. It will slow people down from perhaps making that ambitious leap. They'll say, okay, we've got all these different things going on all around the world, and the election's going on. Let's just wait till the smoke clears a little bit. So, yeah, I think that's right. Anthony, you mentioned that roundtable. Tell us, who were the directors cheering for? Did you get a sense? Was it Labor or Liberal, Albanese or Dutton? Are they that clear cut?
I'm sure they have their personal preferences, James, but they all come to these things with their business hats on, and from a business perspective, it doesn't really matter. Like they have to work with both sides, and I mean they probably fare about as well under either side. I mean, you can say that Labor, goes too hard on the IR laws, for example, but then look how the Liberals let their China relationship sour and inflation gets out of hand, and business will work under either. Yeah. What they fear, though, James, is the minority government.
Yeah.
We've been there before, not too long ago. There's a solid chance that we're headed there again. In a minority government, you get all sorts of instability and deals being done, which can promote these sort of like niche or side issues up the policy agenda and sort of kill any prospect of solid or much needed reform in really sort of mainstream areas, tough things, NDIS spending, for example. So, I mean, if neither major party has the numbers to form government on their own, the government of the day gets the first chance to negotiate with the minorities, then the opposition. You can pretty quickly get the situation where, as one of the directors put it, those in the passenger seat are the ones that are determining the agenda. And inevitably, I mean, the politicians, the wider public, everyone gets jacked off with a situation like that. The government calls an election as soon as it thinks it can win one, and we're back to where we are.
Here we go again.
Now, square one. Uncertainty about policy settings, etc. So, You know, while there's business people out there pumping up sort of one side or the other, James, and we've seen a bit of reporting about donations this week. I mean, I think the mainstream's really just watching both sides and cheering for a proper government, not a hodgepodge group of minority situation where it's just a Band-Aid till next time.
Yeah.
James, like you were talking about this before, like we've seen a few themes come out of that US election, you know, the populism, the vote for change, the nationalism, pushback against big government. There are US issues at the moment, but which of these do you think will cross over the Pacific and feature in the Australian election?
Oh, I guess if I had to pick one of those, I'd say sort of populism, but it's sort of populism through an economic lens.
Yeah.
We've seen across last year, the thing that decides elections is people's unhappiness with inflation and rising cost of living, even though inflation growth, the rate of inflation growth has come right back down, which is great. You know, grocery prices are still 20 to 30% higher than they were 3 years ago. And people see that every week when they go to the supermarket.
Yeah.
And that eats away at people. So you will get that mood for change that I think Donald Trump and lots of other politicians across the world last year were able to seize on. So it makes Albanese's job hard, makes Labor's job hard, but the gap that the coalition needs to bridge to win government is large as well. So and that's why I think everybody's sort of, that adds to this sense of, you know, I don't know what's going to happen. No one knows what's going to happen. I better just keep my head down. So, but that's the issue. Cost of living will still be dominant as we head into the election.
Yeah.
You know, in the next couple of weeks. Well, really, it's on now, isn't it?
Oh, it sure is. On the cost of living, James, I think it's just dawning on everyone that, you know, just because inflation can get back to within the RBA's band, I mean, assuming it does for the long term, doesn't mean prices come down.
No,
you know,
right.
like you say, those grocery price increases that we've seen. I mean, they're not getting reversed.
No,
you know, the loaf of bread's still going to cost what it does today. Like it's not going backwards.
Yeah, no, indeed.
Now, James, the RBA board's next meeting is on February 17 and 18, and I'm sure we'll talk more about this next week. But it's a huge moment in the context of the Australian election. Can you tell us, why is it so important? And while we've got you, can you please give us an update? Are you still sitting in the February rate cuts camp like you've been for more than 12 months now when no one else was talking about it?
Oh, well, I think everyone else is now in my February cut camp, Anthony. The bandwagon I've been driving for a long year is now full. I don't think the RBA's got any choice but to cut on February 18. So the market, you know, to not cut would be to defy the market. I'm actually less sure they should be cutting. I think the labour market's still really strong, and you know, imagine how embarrassing it would be if they had to cut and then raise again, or that'd just be the worst outcome. But nevertheless, I think a cut is coming, and I think that's good news for Albanese. I know he'll be pointing to this and saying, you know, look, we've had some tough times with inflation, but we've now got on top of it, and rates are coming down, and your lives are going to get easier. That'll be a relatively powerful message, I guess. Certainly won't hurt the Labor's chances. And I imagine that Albanese will be really keen to capitalise on it, won't he?
Yeah, I'd say so, but I mean, I'm still not sure this inflation fight's won, James. I know the whole market's tipping a rate cut. I know the bond market says 95% chance of a rate cut as of this morning, but I'm still not sure inflation's sustainably back to the middle of that range. And you know, and then the next thing, I mean, what does one rate cut change anyway? You know, nothing. How much better off are people going to feel? I mean, obviously it will help with sentiment. It can give the government something to point to, but yeah. I mean, what caught my eye over summer is the Australian dollar. You know, like it was nearly 70 cents in October, 67 cents in November, 61 cents early this week. Like that's a giant fall for the Australian dollar. Like we're talking about 5-year lows there. You know, it was quite amazing.
And that makes the RBA's job a little bit tougher, right? Because we're effectively importing inflation.
100%.
Yeah, well, it'll be an interesting one to watch, and it's going to be a big couple of weeks for the RBA. All right, Anthony, we'll come back after the break. We're going to take you inside the new Millionaires factory on the ASX. Back in a sec. Okay, welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Friday, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. Okay, Anthony, on Thursday, a big moment when Sigma Healthcare is finally officially merged with Chemist Warehouse. After, I don't know, a year and a bit of waiting, we're finally going to get to see this thing trade on the ASX. Now, I went down, Anthony, while you were away.
Yeah.
I went down to the Olympic Hotel in Preston in Melbourne, which is the most unlikely venue to see Chemist Warehouse shareholders vote this deal through.
Yeah.
The meeting lasted 16 minutes, so they were pretty keen to get it over and done with and get into their lasagna dinner.
Very efficient.
Now, we know that this deal is going to crystallise some serious wealth for a lot of people. Now, we know Jack Gantz and his brother Sam Gantz and the CEO Mario Verrocchi, they're the heads of the company. They're going to come out of this with $15 billion worth of shares between them.
Billion.
Nice work
billion.
if you can get it. $15 billion. But what we're only now understanding is what's happening underneath that. So there's one shareholder in this business, franchisee. We don't know who they are yet, but they're going to come out of the deal with more than $600 million in shares.
Whoa.
2 shareholders will hold stakes worth more than $400 million, and then 7 shareholders will have stakes between $200 million and $400 million. Now, that's impressive enough. But here's the rump. 104 investors in Chemist Warehouse, most of them pharmacists, most of them franchisees, are going to have stakes between $5 million and $25 million. This is a millionaire machine, Anthony. Have you seen anything like this outside of Macquarie Group?
Mate, this tops Macquarie Group.
It's amazing.
Far out. It's amazing, isn't it? We were lucky enough to spend some time with the Gantzes and Mario Verrocchi late last year, and it became very apparent that until a couple of years ago, this was a family and friends business, wasn't it? And if you were there, if you were one of the franchisees, you didn't just have one chemist, you had multiples or dozens, and it was very, very concentrated. So we're seeing that now with how much money some of these people have made. But
the interesting thing at the Olympic Hotel was that a lot of these people are young guys and girls.
Really?
Who have come into this franchise, and as Mario Verrocchi said, they come into the business, they've been sent to, some rural place to go and open a chemist for the Gantzes and Mario, and they're now going to walk away with seriously wealthy. So you talk about risk-taking and growth-making, as our old editor Michael Stutchbury used to like to say. This is a great example of it, and, it's a terrific story.
yeah.
All right, a couple of other things next week. Commonwealth Bank results. This is the big kahuna of the Australian market. Shares hit another record. What do we look for, Anthony?
If I had to name one thing, James, I'll say the dividend. That's the number that expresses both performance in the half and the outlook, confidence in the outlook for the future. I mean, CBA shares are now too expensive for the company to be buying them back, so it's distributing its surplus capital via the dividends. I mean, analysts expect the $2.24 a share dividend for the half year, James. I mean, if it's more than that, it can mean one thing. If it's less than that, it can mean another. It can mean both. But there's going to be, I think, a lot of focus on that dividend. That's me down in the weeds, though, James. Am I missing something? Should we be thinking more big picture?
Oh, look, I think CBA's had good data for the last couple of years on how the different age cohorts in Australia are spending and saving. Going to be fascinating to see how that comes out again. Is there any change in the sort of boomers rule the country narrative? I don't know, but let's watch that. And just another thing to look out for, very early Thursday morning, we'll get US inflation. So that'll give us a bit more feedback on where the Fed's going. So watch out for that. We'll have questions here on the Chanticleer podcast. This week our question is from Lucas Anderson. If you've got a question you want to send in, you can email us at chanticleer@afr.com. You can also send us a question in audio form. Just record a voice memo on your phone, include your name and where you're from, and email it to us. So Lucas writes, the NDIS website lists $194 for most therapists, like physio, occupational therapists, podiatry, etc. But as a private customer, I've never paid more than $100 for physio. Why are NDIS rates so far above market prices? How are these rates set? And is it any surprise that costs are rising so fast that they soon may overtake Medicare? Anthony, this reminds me of when you go wedding cake shopping.
Yeah.
And you see in the window, a $30 cake or whatever it is, and then they say, oh, well, if you want the wedding cake version, that's $120, and you sort of sit there scratching your head. So, I mean, look, I don't know a lot about how NDIS price lists are set, but this has been a sort of common complaint that there is a degree of overcharging built into the NDIS that is making it more expensive than it should be, and also creating wastage such that the money could be better used to help more people get access to assistance. Bill Shorten, who's currently the minister for the NDIS, an outgoing minister, he's retiring at the next election. He's trying to put the brakes on some of the spending and cut down on the waste, but it looks like this is going to need to be, sort of continually kept on top of, right? Just to make sure that the program, which is very noble and very important, serves the people who need it most in the best possible way.
Yeah, it sounds like low-hanging fruit for Elon and the raising gang of 6 grads, doesn't it, James?
Yeah.
And on the cost front, though, like NDIS is at $42 billion in 2024. I mean, that's already more than Medicare, more than aged care, more than federal government funding for hospitals, more than the pharmaceutical benefits scheme. The horse is bolted and really needs reining in.
Yeah, but it is an important scheme, so
yeah.
We want it. I think the thing about it is we want to make sure it's sustainable and workable forever. We don't want this thing to suddenly disappear, which might be the Elon Musk Doge approach, just to shut something like this down. We don't want to do that. We want to make sure it works as well as it can, and yeah, we drive some of those prices down so we can do more of the good stuff that the NDIS does.
Absolutely.
All right, Anthony, great to be back. And look, the summer holidays are now a distant memory. We're into earnings season next week, and I reckon it's going to be great fun.
Yeah, James, there's going to be plenty of corporate news to chew on.
All right, we'll see you next week. Thanks for listening. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At the Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to the Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson and Anthony McDonald, and it was produced by Alex Gow and Lap Fan. Our theme is by Alex Gow. The executive producer is Fiona Buffini.
The Australian Financial Review.